Hello everyone, welcome to yet another weekly analysis. So for this week, we've got about two pairs for this week. Every time we try to keep it simple. We try to keep it simple. We try to keep our analysis as simple as it can be. So I'm saying to you. So for this week we have just two USD card and ADUSD. Excuse me, USD card and ADUSD, and then we'll provide we'll analyze entry opportunities and whatnot. So first and foremost, we'll start with the monthly time frame top down analysis, and that's the way to go, as we've been saying every time we come on here for weekly analysis. We'll be saying the same thing. Top down analysis is the way to go. Now we have to start with the monthly time frame. But the monthly time frame tells us the overall, or gives us the overall view of the entire market. Now, I want you to understand this, right? The market moves from zone to zone. That's what I'm saying to you. From a particular range to a particular range. That's what I'm saying. That when you've divided, or rather when you've you know, segregated a particular level in the market from the weekly time frame or the monthly time frame, then you can trade in that level. You see what I'm saying to you? You could just forget about the other levels and then focus on the particular level that is right in front of you. So for the monthly time frame, we can see that the market now, structural wise, I'll say this: structural wise, we are bullish. That's what I'll say right now. Structural wise, we're bullish. We are not bearish until we break below this level right here. That's what I'm saying to you. Until we break below this previous structure, we are not bearish. Be that as it may, we need to understand something, right? Like I said, the market moves from zone to zone, from zone to zone. So if you look to the left hand side right here, we came all the way here in 2016. We came down here. That's what I'm saying to you in 2017. We came all the way back here again in 2020. We came back. We came down here in what 2021. We rallied all the way back up here again in 2025, and then we're expected to come down here by 2026, because why? It's taking 1 year. Every time we come on here, it takes 1 year to drop. Every time we come on here, it takes 1 year to drop. But it may not do that. You need to understand something. It may not do that, but it is important to have a plan. It is very, very important to have a plan. You need a plan. So moving forward, we are expecting the market to come all the way here, but it is not bearish yet. But would we have to wait for the market on the monthly time frame to turn bearish? No. Instead, we'll catch the reversal. You see what I'm saying to you? It is important to know this. We will catch the reversal with trading plans in place. If we use our counter trend line, we would see that we've already broken the counter trend line. You see what I'm saying to you? And this is one one opportunity for us to be like, okay, it is possible for us to actually catch this reversal, because we've broken the counter trend line with two candles forming outside of the counter trend line. So moving forward, we've established the fact that we are in a reversal. The same thing to you, are what in a reversal. It's about to happen. We need to catch it. We need to be involved in the reversal, right? Now we'll go to the weekly time frame. And the weekly time frame, now you need to understand this. We do not trade on the monthly, rather we trade on the weekly. We come to analyze the market on here. We come to look for chart patterns that we could place our what areas of interest off of. You see what I'm saying to you? Place our what areas of interest off of. Now on the weekly time frame, all you have to do is look left. You don't have to do anything but look left. All you have to do was look left, and if I look left over here, I'll see a chart pattern right here. That's why this is where I place my area of interest, right? This is the most previous chart pattern before this level, right? But I think I place my chart pattern right here, and then sorry, not my chart pattern, my area of interest, rather my support here, and then above, if I look further left, there is another double top around this place. Any place that any point in the market that it touches more than twice, it's considered what an equal high, a double top, an equal high. That's what they are. Double bottoms are equal lows, double tops are equal highs. So something to it. So moving forward, now on the weekly time frame, we cannot execute trades, right? But we can have a holistic approach to the market, right? So now we need to understand the trend. What is the market saying? Are we trending? Are we bullish or are we bearish? Because we have to trade in the direction of the market time frame. That is an A plus setup, right? Now we've broken structure around here, created a lower low, lower high, a lower low. This is not a lower low until we close below it. So we haven't closed below it. So this is still a lower low. Now, for the weekly time frame to be bullish, we have to break this structure. That's what I'm saying to you. So for now, we are still very much bearish, and we are most likely creating a double top around here. Now, like I said, look left. it's very important for us to look left in the market, right? The market will 9 times out of 10, right? It will repeat itself. Nine times out of 10, it will do what it's done before, right? Now, if you look left over here, we'll see that when we're trying to rally up to the upside, we could see that we had some sort of range in this price in this price range. The same thing we had the range, came up, came down, came up, came down, came up. The same thing. So now coincidentally, it's happening again, right? Down, up, down, up. We're expecting to what rally all the way to the downside because it's the same thing it did. You see what I'm saying to you? So we've had the range here, we're having the range here again. We're expecting it to what drop all the way to the downside. Now, and if you look closer, you would see that we've had what a bearish engulfing. Now this candle it's definitely closed below this candle, so it's enough for the. You see what I'm saying to you? So now on the daytime frame, now like I said, we cannot trade the monthly or rather on the weekly, but we can execute on the 4 hour, the 1 hour. It's something. So now the daily time frame. Now you need to understand how I'm moving from time frame to time frame, from the highest to the lowest. It's very important to know this. You cannot go and make an analysis on the 4 hour time frame and then expect the weekly time frame to hold it, to expect it. You cannot draw a trend line on 1 hour and expect the daily time frame to respect it. It's impossible. You see what I'm saying to you? So moving forward, right? Moving forward. Now, there's a reason why I have this section, marked out, and I will show you why on the 4 hour with that the 4 hour time frame that we're using to execute. Right now, we are still, pointing to the downside. This is a range, and we're expecting the market to open next week and then come all the way here. Now, it is important to have a plan. Would it come down? It may not. It's something to you, but it is important to have a plan. You need to plan. It's something you need to plan. It's important to have a plan. So moving forward on the 4 hour time frame, right? The 4 hour time frame. Now this is where I come to execute. This is where I what come to execute. Now there's something called a reversal pattern. It's something to you. Now this reversal patterns, the one we see right here is a head and shoulder, right? This is a head and shoulder, left shoulder, a head, a right shoulder, right, a right shoulder. Yeah. So this is it, right? Now a head and shoulder is not a head and shoulder until they break the neckline, and this is the neckline. It's something to you. So a head and shoulder, or rather any chart pattern, double tops, double bottom, they are not chart patterns until they were close below the neckline. This is the neckline, right? These are the two shoulders, left and right. Now I need to understand something, right? For every time the market shifts structure, like so, right, like so, every time the market shifts structure, closes below this last structure right here, now it's bearish because it's closed below here, right? So it's now bearish. So for every time it does this, you have to wait for it to come into the left shoulder. It has to come and form the left shoulder. It's something to it has to come and what tally itself up with the left shoulder, and that is when the price starts to fall majorly. When I mean it, most time, right? It doesn't even let you have a confirmation. It just plummets to the downside. How do I know that? If you look at the left hand side, this one I'm saying. Always look left. It's something to you. Always will look left. Now, if you look over here, right, you will notice something, right? You see that this is most likely this was forming a head and shoulder, higher high, higher low, higher high. It did not break structure. It's something to you. So we haven't formed the right shoulder yet. The right shoulder is formed after the structure is broken. It's something to you. The right shoulder is formed after the what structure is broken. If it forms a shoulder right here, it hasn't formed the right shoulder yet. Until it breaks structure, that is when it is a head and shoulders. You see what I'm saying to you? So it makes sense right now, right? So it came and then we broke structure right here. We broke this excuse me, this was when we broke the structure right here. Now what did the market do? It came all the way up to the left hand side. You see what I'm saying to you? It came to form what? It came to tile itself up with the left shoulder, and that is when the sell off starts. You see what I'm saying? That is when the word sell off what starts. And then it came down. You can see how much it respected it. It just weaked it and then it fell. You see what I'm saying? It fell to no. Now we're expecting the same thing to happen this time around. Now, how do we execute in this case? In this case, I would, most likely set a sell limit around there. My stops will be above, the head, and then my take profit will be right here. But because I had exceeded my trade entries for the week, I couldn't, place a trade. It's something, but on Sunday when the market opens, I would be executing. It's something. So now this is the reason why I have this level marked up. Head and shoulder, right? Left shoulder. Now this is when we broke the structure. It has come back all the way to the right shoulder. Now it's looking like it's respecting it. If you on the 1 hour, you will see bearish engulfing forming. That's what I'm saying to you. You can see, in the evening star formation right there. You can see that, it's looking like it's about to respect it. It's something to show. I need to, we need to be involved in this, in this push to the downside. Now, would it respect it? I expect it to, right? It's something to you. Now, even if it doesn't respect it and you take a loss, it's fine. If you're gonna trade for us, if you're gonna hit your take profits, you're gonna also hit your stop losses. Just like in Formula One, if you're gonna race a car, you're gonna crash a car. It's what I'm saying to you. So it's important for you to know this, right? Now, is it good to just take unnecessary losses? No, I will not advise you to take unnecessary losses. That is why you need to have a structured risk management and a structured entry strategy in place to be able to help you avoid taking unnecessary losses, because most of the time we just take unnecessary losses. Sometimes it's not even most time it's not even the market's fault. It's something to you. Most time it's our fault where we take unnecessary losses. We know we're not supposed to enter a trade and we execute. We know we have not we do not have enough confirmations to execute a trade, but what we execute. It's something to you. So now looking to the left hand side, right? Looking to the left hand side with this, loose support resistance we have here, right? If you take all the way to the left hand side, you see that it is the same price range that we rejected from before that we're expecting to reject from again. It's something to you. So this is a little entry trick that you need to understand. If you backtest it a lot, if you use it a lot, it will help you. And it's helped me a lot. So so that's that for now. So the next pair will be ADUSD. Now the ADSD is supposedly ready because it's looking good on the DXY. You dig what I'm saying? It's looking good on the DXY. So the ADSD will analyze it from the monthly time, right? Top down analysis, but that's the way to go. There's no other way to go but the top down analysis. It's very important. Most people might not analyze the markets from the higher time frame, from the monthly time frame, because it's too much work, because they don't have the patience to wait. But that's how money is made. It's something to your patience. So like I said, we are in a reversal and we're expecting to catch the reversal, right? It's something that we're in a reversal, we're expecting to catch the reversal, because structural wise we are bearish. I will not tell you otherwise. Structural wise we are bearish. You have to be truthful to yourself. You have to Don't deceive yourself, don't lie to yourself. Say what you see, it helps, right? Write down what you see, it helps. Structural wise we are bearish, but we're expecting to catch the reversal. Something. So on the weekly time frame, we are bullish structural wise. Something to we are bullish structural wise, so it means that if the reversal is imminent and it's possible for us to be able to ride the reversal, right? Now on the weekly time frame, higher highs, higher lows, higher high, higher lows. It looks very good. There's nothing more to add there. But on the daily time frame now, this is where the juice is, right? Because on the daily time frame, this is where we come to look for our support, look for our areas of interest. It's something to. So on the daily time frame, we haven't touched. There's something I'm going to let you know right now. Yeah, it's important to let price touch. It's important to let price be precise. There's something to you. Price has to be precise. Now, if you look closely, if you look, you will see that we haven't really touched the support line. We haven't touched at all. You can see that this red candle right here, it's far off, and it's slightly far off. But I'm not going to execute until it touches, and that's that. If it does not, if even if the market decides to go all the way up, right, going to our direction, I will still not get involved, because I've taken losses like this where it's just shy off, and then when I execute, and then it comes and then takes me out, and then touches it rightly and then goes all the way to the upside. I've taken losses like that, and I'm not going to repeat the same mistake. Now, what if it goes and leaves me behind? It does not matter. It does not matter. That's what you need to understand. Your five, even if let me tell you something, right? Even if you have about $100 in your account, in your trading account, right, and it's still $100 after a month, trust me, you are still in profit. You see what I'm saying to you? You are still in profit, because what? Trading capital, your trading capital is still profit. Essentially, your trading capital is still profit. So even if you don't make a move because you haven't found the right opportunity, it does not only help you to avoid losses, but it also trains you in knowing that you have to wait for the right opportunity to present themselves. There's something you have to cherry pick the market. There's something you have to cherry pick the market. So in the 4 hour time frame, now this is where we wait for market execution and whatnot. Now The reason why I have this box laid out is because, like I said before, I use the past to predict the future. Right now, how will I be able to, avoid unnecessary losses, or rather, not unnecessary losses, sorry, but early entries, premature entries? This is what I do, right? I need to, use this past consolidation, right, to predict the next consolidation. And if I box it out from here to here, this is what it gave me, right? So I need this new pullback to fill this box. So by a Monday morning, 7 o'clock, it would have, excuse the dog, sorry. By Monday morning, 7 o'clock, it would have completed this consolidation, and then I will remove this box and then start looking for market executions, right? Now I need to show you the same thing I was talking about on USD card, right? On USD card, I remember saying, right, lower low, lower low, higher high. Now you need to understand something. When we break the neckline, that is when the head and shoulder is being formed. Now what have we done? We've come back into the left shoulder, right? And that is when the push started happening, right? So you see what I'm saying to you? You just have to be patient. Trust me, if you actually wait and don't execute and see what the market does, if it's gonna take you out or not, and you just sit on your hands, trust me, 9 times out of 10, you're gonna actually see that you made the wrong decision. It's something to you. So this is the plan for for AD, USD, and USD card. Nothing serious, nothing fancy. Break, retest, patience. It's something to you. Break, retest, patience. That's all that there is to know for this week. You just have to wait. Even if you don't take a trade this week, it's still fine. You are still in profit because why? You haven't taken a loss. It's something to you. Let me tell you something, right? I'll leave you with this. The only thing that makes impact the only thing that makes an impact in your trading account, in your trading portfolio, is not profit, it is losses. Losses are the only thing that will make an impact in your account. Example to you, profits, they will come regardless. If you're trading forex and you follow your trading plan, profits are gonna come. But the only thing that makes an impact in your trading account are the losses. So you do not want to make that kind of impact in your trading account. Wait, be patient, and then execute when the market gives you an opportunity. And that's all for this week. And I hope and I pray that you love follow your training plan. Something you follow your training plan, keep planning, keep being persistent and consistent in your trading, and everything will work out for your good. Have a great week. Have a great weekend. Ciao, ciao.